In the heart of Denver, Colorado, a company born from the ashes of September 11th has reshaped how the world handles data. Palantir Technologies, named after the Seeing Stones from J.R.R. Tolkien's Legendarium, has become a powerhouse in data analytics and artificial intelligence. But how did a secretive startup grow into one of the most valuable tech companies in the world? And is its sky-high valuation justified? This is the story of Palantir, from its founding to its present-day dominance. Palantir was founded in May 2003 by a group of visionaries led by Peter Thiel, co-founder of PayPal, alongside Alex Karp, Stephen Cohen, Joe Lonsdale, and Nathan Gettings. Their mission was audacious: to build software that could integrate and analyze massive datasets to combat terrorism while preserving civil liberties. As Alex Karp recalled in a 2014 interview, "We wanted to create something that could solve problems no one else could touch."
The most important thing, in my view, that can happen for the preservation of the West and its values is for the U.S. military to be by far the best in the world.
The post-9/11 era exposed a critical gap in intelligence. Agencies struggled to connect disparate data sources. Palantir's answer was a software platform that could see patterns in chaos. Early funding came from the CIA's venture capital arm, In-Q-Tel, which invested $2 million alongside $30 million from Thiel's Founders Fund. This backing gave Palantir instant credibility in Washington. By 2004, Palantir had developed a prototype, leveraging PayPal's fraud detection expertise. Despite early struggles to attract investors, Palantir's persistence paid off. As Karp noted in a 2020 interview, "We were told we'd fail, but we kept building."
And this is the secret to our company. And even when we went to market, we didn't hire sales. We still don't have salespeople. We have no salespeople working for us at Palantir. We sell the product by exposing clients to it and saying, compare us to what you have.
Palantir's software is built on 4 main platforms: Gotham, Foundry, Apollo, and the artificial intelligence platform. Each serves a unique purpose, transforming how organizations handle data. Gotham, designed for the intelligence community, helps analysts identify patterns in complex datasets, from signals intelligence to informant reports. Used by the U.S. Department of Defense and intelligence community, it's authorized for mission-critical national security systems. In 2024, the Navy awarded Palantir a $1 billion contract for Gotham, cementing its role in national security. Foundry is Palantir's commercial offering, a central operating system for enterprise data. It integrates diverse data sources, enabling companies like Morgan Stanley and Airbus to optimize operations. Foundry users report a 30% reduction in supply chain costs, showcasing its impact. Apollo streamlines software updates across environments, ensuring seamless deployment for clients. It's the backbone that keeps Palantir's platforms running smoothly. The artificial intelligence platform integrates large language models to transform structured and unstructured data into actionable insights. It's driving Palantir's growth in enterprise autonomy, with U.S. commercial revenue surging 71% year-over-year in Q1 2025. Palantir's high-touch model sets it apart. Unlike typical SaaS companies, Palantir embeds engineers with clients, ensuring deep integration. This approach, while costly, creates long-term partnerships, as CEO Alex Karp emphasized in a 2024 product demo. From its roots in government, Palantir expanded into the commercial sector. By 2010, partnerships with Thomson Reuters and J.P. Morgan showcased its versatility. In 2014, IC awarded Palantir a $41 million contract for its investigative case management system, used to track immigration records. By 2019, Palantir took over the Pentagon's Project Maven, developing AI for military applications. Palantir's revenue reflects its growth. From $1.1 billion in 2020, it climbed to $2.9 billion in 2024, a 29% year-over-year increase. Q1 2025 saw revenue of $884 million, up 39%. Government contracts, like a $795 million DoD deal in 2025, account for 55% of revenue, but commercial growth is accelerating. Profitability was a hurdle until 2023, when Palantir flipped to profitability. Net income reached $462 million in 2024, up 120% from 2023, with earnings per share at 23 cents. Free cash flow hit $1.3 billion in the last 12 months, supported by a net cash position of $5.2 billion. Palantir stock has been a rocket, soaring 480% in the last 52 weeks to a market cap of $375 billion, making it one of the top 20 U.S. companies by market value. But its valuation metrics raise eyebrows. Palantir's revenue grew from $1.1 billion in 2020 to $3.1 billion in the last 12 months, a 33% year-over-year increase. This outpaces many peers driven by AI adoption and government contracts. Net income turned positive in 2023 with $210 million and surged to $462 million in 2024, a 120% increase. Earnings per share rose from negative figures in 2020 to 23 cents in 2025. At 277, Palantir's forward PE dwarfs peers like Tesla's 175 and Salesforce's 55. This suggests investors are betting heavily on future growth. Free cash flow of $1.3 billion and a net cash position of $5.2 billion signal financial strength, supporting expansion without heavy debt. However, Palantir's valuation is stretched. Its trailing PE ratio is 679, and its price-to-sales ratio is 124. The price-to-book ratio of 68 reflects a market price far exceeding tangible assets. Analysts estimate an intrinsic value of $15 per share, compared to its current $156, suggesting a 90% overvaluation. Is Palantir a good stock to invest in? Its strengths are undeniable. A strong moat in government contracts, growing commercial adoption, and a robust balance sheet. Its AI-driven platforms position it to capitalize on the data analytics boom. However, risks loom large. The high-touch model limits scalability, and competition from cloud giants like AWS and modular AI platforms threatens margins. A recession could compress multiples, with forecasts suggesting a 50% stock decline if GDP falters. Analyst consensus is cautious, with an average rating of hold and a 12-month price target of $111, implying a 29% downside. Insider buying signals optimism, but the stock's beta of 2.6 indicates high volatility. Palantir Technologies has transformed from a secretive startup to a leader in data analytics and AI. Its platforms, Gotham, Foundry, Apollo, and AIP, power mission-critical decisions worldwide. With strong revenue and profit growth, plus a fortress balance sheet, Palantir's future is bright. Yet, its sky-high valuation, with a forward PE of 277 and a price-to-sales ratio of 124, demands caution. Investors must weigh its transformative potential against the risk of a sharp correction. Palantir is an interesting company to watch.